I'd like to welcome you to Sanborn Auditorium at the Hingham Town Hall. My name is Bruce Rebuffo. I'm the chairman of the Board of Selectmen. This evening we have a number of state and local officials here to hear some of your questions and concerns. Most importantly, this evening, the person and the principal speaker is our Congressman Steve Lynch, who will give you an update on congressional action in response to the recent FEMA maps that many of you have seen and perhaps have observed through your insurance agents communicating with you. He has some proposals to talk with you. I want to say something about Steve personally, because I teasingly said to him, I've been in Hingham over 20 years. I've seen more of Steve in the 4 years or so he's been congressman than I saw of any of his predecessors. And I think that's a credit to why he is here this evening. My understanding is that he reached out to our state senator, Bob Hedlund, who also discussed with our state representatives with the idea that this is a concern to all of us, and what can we do about it? So I think by his reaching out to Bob is an example of the bipartisan approach that we need more of in this country of ours, and this is a fitting example for something that we need to do. So I'd like to turn and introduce Bob Hedlund, who would in turn introduce Congressman Lynch. Bob?
Thank you, Bruce, and thank you, Hingham, for hosting and providing the facility tonight. As one who grew up here, I have a lot of fond memories in this room. Pep rallies, you loved it when you had assemblies, kind of tune out, get out of class and tune out for a while. But as a state senator, I don't have such fond memories in this room. It seems every time we convene here, it's for water rate hike hearings before the DPU, it's for MBTA service cut hearings or MBTA rate hikes or fare hikes, and now this. But I'm glad everyone is able to be here tonight with us to provide some input to the congressman. I just want to recognize a couple things real quick. We don't have a lot of other state officials with us tonight because the House of Representatives is in session debating a welfare reform bill, but I know that we have folks who are here representing, and were with us in the previous meeting that we held upstairs, representing the offices of Senator Keenan. I saw one of his aides here. Representative Bradley's aides were present, Representative Murphy's. If I'm missing anyone, give me a wave and I'll recognize your boss. We also have representatives from Congressman Keating's office that are with us, and I would encourage him to certainly give his input if there's anything we miss as we proceed. Also, many town officials were present for the meeting that we had with Congressman Lynch prior to this, and I know that many of them are still with us. We have town officials from, just off the top of my head, Howell, Duxbury, Weymouth, Quincy, Hingham, Cohasset. We have representatives of the Coastal Coalition, the citizens group that has been formed in response. And any town officials representing towns that I didn't mention, give me a wave, and I will note you. But I think we had a pretty good turnout in terms of town officials with us, some who remain with us, some who have left. Real brief, I do want to get this over to Congressman Keating, and, Congressman Lynch. My former colleague from the Senate, I shouldn't make that mistake, although I also served with Bill Keating when he served in the Senate, and he sat next to me. Maybe that's why I've got him on my brain. Stevie sat across the room from me. But both congressmen have been communicative and responsive throughout this process. When the phone started ringing on Beacon Hill, we were quick to remind people that this was a problem that emanated from Washington, but that we certainly stood at the ready to assist in whatever way that we could, and whatever resources that we had available to us at the state level. I know that we immediately engaged in conversation with the Congressman's office, but also we tried to engage and have engaged the assistance of the State's Attorney General. In a number of states, the state attorney generals have been looking at legal recourse to help protect homeowners in the affected states and affected areas. Martha Coakley's office has been responsive on that front, resulted in legislation at the state level that she filed. Didn't go as far as we had hoped, but nonetheless, it was a step in the right direction. So it has been a kind of a full court press, and I think the Congressman will talk about a little bit about the coalition that's been formed in Washington. Not a lot of good, we know, has come out of Washington as of late. In fact, not much has come out of Washington as of late, but it is encouraging to see that there has been bipartisan effort to address this problem and correct what the result of Bigot Waters has been and what that has left us with. So without further ado, it's my honor to introduce Congressman Steve Lynch, former colleague of mine in the state Senate, and I know he's got a lot to say tonight, so I wanted to keep my remarks brief and certainly encourage input and questions once he makes his presentation from everyone that's assembled here tonight. Thank you for coming.
Thanks, Bob. Thank you. Thank you, Senator, and thank you, Bruce, for those kind words. After our two major meetings, we had a meeting in Marshfield earlier on this the new FEMA flood map process. We had a follow-up meeting or rally, if you will, in Scituate a few weeks after. We met in Washington with myself, Congressman Keating, and in the beginning there were about maybe 35 to 40 members of the House of Representatives, members of Congress, that represent coastal areas. Some of them represent areas inland that are impacted by rivers and streams. But we sat down to look at the impact that this new process was having on the constituents that we serve. Fortunately for me, I have a great state delegation that I work with, including Senator Hedlund and also Representative Jim Cantwell, Representative Garrett Bradley, Representative Jamie Murphy, and Bruce Ayers over in Quincy. Just a good group. And what we were able to do by relying on Bob and the other state representatives and the boards of selectmen for a lot of the towns that are here today is we used our data, our information of previous flooding activity and previous rate assessments to make our case in Washington, D.C. that this bill, the Bigot Waters bill, was not compliant with congressional intent. In that bill, we had asked that FEMA conduct an affordability study to make sure whatever changes were made in the flood mapping process, that affordability for those impacted families be considered first and foremost in rolling out any new schedule. So we had great response. We eventually had 82 members of the House sign on to a bill along with myself and Congressman Keating, including Congressman Capuano, who represents part of Boston Harbor and a little bit of the North Shore, as well as Congressman Tierney as well, who signed on. So we got 82 members across the board, Republicans and Democrats, from California and Louisiana and Mississippi to all along the East Coast. And we came up with the legislation that I think has a very high probability of passage. And I'm going to explain what that bill is. It's actually called the Flood Insurance Program Affordability Act, but I sometimes refer to it as a relief act because that's really what it is. It's to get us out from under the high rates that people talked about in those meetings in Scituate and in Marshfield, and provides relief for a lot of the families who are in that situation. Now, importantly, I want to point out that this bill doesn't do everything for everyone. Okay, and I'll explain what that means. To be perfectly blunt with you, if you are a homeowner and you own a primary residence, you have a primary residence in an impacted area, this bill is very, very helpful to you, and I'll explain the details later. But if you hold that property as income property or a vacation home or a second home, a non-primary residence, this bill does not do a lot for you. It does some things, but it does not provide the relief that it does for people who have properties that are their primary residence. And I'm sure we'll have questions about the definition of primary residence and the like. But what it does do for those and businesses, so for primary residences and businesses that were previously grandfathered under the old system, the bill that we're working on right now, and it is the identical language right now in the House and in the Senate, would provide for a 4-year delay in new rates. So you would not see new rates for at least 4 years. The reason that I target 4 years is that it requires that affordability study by FEMA to go first. And that's a 2-year study. According to FEMA, they believe that that study will take a minimum of 2 years. After that 2 years, there's an 18-month period where FEMA and other regulators will have to look at a regulatory response to address the affordability concerns that we've raised or discovered within that affordability study. So there's 2 years plus 18 months. And then at the end of that, the regulatory process, Congress has a 6-month review period after that, where Congress will review whether or not FEMA has adhered to the affordability mandate that is in the relief bill. Okay? So that's how we get to 4 years. Now, after Congress reviews, it will have the opportunity to provide directives to FEMA. In other words, if we don't think that they are properly addressing the affordability issue, we can give them further directions which would make that period even longer before they can implement the new rates. So that provides the space for us to come up with a much better bill, and it holds harmless those families that would normally be affected. Now, there are some exceptions in the bill. There are some exceptions to the bill for people who are in primary residence, and I'll enumerate those. If you are a severe repetitive loss property, which means the following: if you've had 4 losses, 4 claims of the federal flood insurance program claims, if you've had 4 of them and they've been over $5,000 each, reaching a total of $20,000 within a 10-year period, then you are not getting the delay benefit. The new rates will come in on severe repetitive loss properties. So if you're one of those people who has had repeated claims over and over, and you file claims and you're continually paid and it's over $20,000, then you are not covered. So you'd have to either engage in the appeal process as to whether or not you're in the flood zone or the elevation that you've been given. You still have those rights of appeal, but you do not get the benefit of the delay. If you are a repetitive loss property where you've had 2 events, 2 claims, okay, not 4, 2 claims within a 10-year period, where those 2 claims exceed the value of your home, the building itself, you also do not get the delay. Okay, so if you've had 2 claims, if your house is worth $500,000, you've had 2 claims, and they're both over $250,000 each, and so you've been compensated more than the value of your home in those 2 incidents, you are similarly not given the advantage of the delay. And lastly, if you've had 1 substantial storm and a claim where you've put in a claim for over 50% of the market value of your home, so this would not be just the building, but the market value of your home, in those instances you are also not allowed the opportunity for delay. The reason that these provisions were in, we call these Katrina provisions, because in some instances there are a lot of properties in those areas in Mississippi and in Louisiana where people have been compensated within the federal flood insurance program in excess of what the value of their homes are. And So this provision was put in, these provisions were put in basically to address those folks that are continually filing claims in excess of the value of their homes. That's why those provisions were introduced. There's a stunning statistic out there. I believe it's 1% of claimants, 1% of people who live in coastal areas or near rivers and streams, 1% are responsible for 33% of the claims under the federal flood insurance program. So that small number of people are depleting the fund, which is meant to protect a lot more people. So the idea of that provision was to try to get at those properties that some jurisdictions allowed, after down in Louisiana, they just allow them to keep building these properties. Some areas in Florida as well. In coastal areas, they continually get wiped out, and then they're rebuilt by using the premiums in the flood insurance program fund. So after the events of Katrina and Rita and Superstorm Sandy, this has caused a whole reassessment of how this flood program and that fund works. So we're trying not to allow a small number of people to continue to deplete the fund. There are a number of other ancillary sections in the bill. One would be to establish, I know that a lot of people are still working through the appeal process. I know that a number of towns have filed appeals on behalf of the entire town, disputing the technology and the findings of the FEMA flood maps. Up until now, we haven't had an advocate within the system to act as an ombudsman or an advocate on behalf of people who are filing appeals. So what this bill does, it actually funds an advocate program, an appeals advocate program within the FEMA process, so that we will have somebody that we can appeal to for assistance with technology and just experience, professional opinions on how to proceed. We'll have an advocate within the bill itself. Another provision within the bill, up until now, if a town decided to build their own seawalls or dams or any other flood mitigation structures, they would not get credit under the FEMA floodplain program. They would not get credit for those seawalls. They wouldn't lower the risk mitigation factor for those towns unless those seawalls received 50% or more funding from the federal government. So if Hull or Pembroke or Hingham went out and used a state grant with a local allocation of money and built seawalls, you would get zero credit for building that seawall in terms of a mitigating factor for flood relief. Under the new bill, it credits communities with any expenditure on their behalf and any structures on their behalf to mitigate flood risk. So that's a situation where we recognize that the federal government was not coming forward with the amount of money that it had in the past to restore or build seawalls or dams or any other flood mitigation structures. And so now at least those communities that come together can get credit for the projects that they do undertake. I'm trying to think. There are, I think there might be a couple of other ancillary provisions in the bill. I'm just trying to remember. But that is basically the long and short of it in terms of the bill itself. In many cases, let me go back. I anticipate there'll be questions regarding primary residences. And when we were drafting the bill, we wanted to make sure that it covered those people who, consider their homes primary residences. And I've heard from a lot of families that have houses along the waterfront with that have been in the houses for, the houses have been in the family for generations. There is no definition of primary residence in the tax code. However, when we looked at the cases that define primary residence, which would allow you this 4-year delay, the courts have generally used a multi-factor assessment. They consider whether you spend most of your time, your usual place of residence is considered your primary residence, whether you pay your taxes, you file your taxes as from a particular residence. That's usually also a factor they consider as your primary residence. If your social activities, your church, your country club, your schools that your kids go to are in an area around a residence, that's usually another factor that goes into being considered as your primary residence. Even some factors, in some of the cases, they looked at the appellant's license. If the appellant's license had their whatever address on their license, that was considered an indicator that was their primary residence. Whether they vote from that residence, that was another factor. So when you think about whether or not a person would be entitled to having that, if some people split their time between two houses, I understand that, but those are some of the things you need to think about, whether or not the house that you're worried about is considered a primary residence and available for that 4-year delay. So that's another factor. I think it might help because there are a lot of different aspects of the bill that might affect some people and not others. I'd be more than happy to open it up to any questions. This is an ongoing process. Like I said, I think we have pretty tight language in the House and the Senate. We have very broad support, Republicans and Democrats, and at least at this point, there does seem to be support from the White House. So we're going to continue to move forward. Mr. Capuano and I have collaborated on a bill that would try to address the gap here for people who use their homes as a vacation home or as a rental. And the problem there is that under the rules of the House, if we were to provide relief for vacation homes or second homes or rental properties, then that would deny a lot of revenue to the flood insurance program and would really require us to try to figure out a way to cut expenditures in other parts of the budget to meet that balance. It's called the pay-as-you-go rule. And we are not in compliance. The bill that we would offer to protect income property and second homes, we're not in compliance with the pay-as-you-go rule. So we have to figure out how to do that in an environment when we're already under sequestration. There's already law that is on the books that requires the government to reduce expenditures by $1.2 trillion over the next 10 years. It's very, very difficult to find additional programs to cut because there's been such widespread reductions in expenditures already on the books. So that's been very difficult. Also, I want to give credit to again, the state delegation for their work and for local officials. They really gave us the ammunition to get down to Washington and make our case in a powerful way and to persuade some of our colleagues to come on and sign on to the bill, even though they may not be in impacted areas. So I want to give them credit on that. And also that this was all taking place at a time when we had a government shutdown in place, and we were on the verge of defaulting on the national debt. So it was very tough to get people to focus on something other than those two big issues. But I'm happy to say that we got 82 members of the House to focus on this issue, which I think is a considerable accomplishment under the circumstances. So I'm happy to open it up for questions if people have any. Yes.
We've got a couple of microphones here so that everyone else in attendance can actually get a question.
It might help if you just say your name and which town you're from, so that'll help.
I'm Jim Morrison, Congressman.
Hi, Jim.
I only heard you say the Senate once. What's Harry Reid thinking about this?
I'm sorry, say that again?
I said I only heard you mention the Senate once. Where's Harry Reid when it comes to this legislation getting through the Senate?
Okay. From what I understand, there's widespread support on the Senate side as well. But there is a requirement, because of the urgency here to get something done, they don't want to entertain amendments. So whatever we pass in the House, they want to have passed in the Senate. So while even at our meeting upstairs with our local officials and boards of selectmen, there were a basket full of suggestions on how we might tweak the bill and make it better. And I don't disagree with those recommendations. The problem is if everybody starts adding little pieces to change the bill, it's going to die on the vine. And I'm just very concerned that we won't have the relief for primary, for people this is their primary residence. I get calls from senior citizens who are on fixed income, and they're staring down at an increase of $10,000, $12,000, $15,000 that they don't have. And so my urgency is to provide relief to them as quick as possible. It's very stressful because this is their home, and so we've really got to step up and get this done. So that's why, I'm happy to entertain anything in terms of further amendments and other bills, standalone bills, but we got to get this done. And that's my concern. And what I understand, what I'm hearing from Senator Warren and Senator Markey is that the Senate is on board. That's what I'm hearing so far. Until I hear differently, I believe it. Actually, if we have identical bills on either side, we don't need a conference committee. So that's really it's a streamlined approach. This might be new for the United States Congress. I don't know. Actually agreeing on stuff, so yeah, I know, it's hard to believe. Yeah. Yes. I'm sorry.
Hi, Jim Pica.
Hi, Jim. Where are you from?
Some income property by a river, and it's been in the family for 65 years. Have never ever had a flood claim, and my insurance has risen 800%. They want 8 times what I was paying for insurance for flood, and never had a claim in 65 years. What's up with that? What kind of ammunition can you give me and anybody in my area?
Okay.
Something to fight with.
Okay. A couple of things. One is I'm trying to get some relief for income properties, but just so you know, I think that FEMA overreached in their mapping process. That's my opinion, because I'm hearing from a lot of families that even during the blizzard of '78, they didn't get a drop of water in the basement, and all of a sudden, bam, they're in the flood zone. So what I think that might be going on, and this is part just speculation on my part, so I have to be honest about that. But what I think they were trying to do is, after Katrina and Rita and Superstorm Sandy, they're trying to recapitalize the fund, the flood insurance program fund. And so what I think they're doing is they're trying to increase the number of people who pay into that. And I think they've overreached. I think they've actually gone to people who are not in flood risk areas, and they're trying to get them to pitch in for those who are. So there's a couple of things. One, I'm trying to get the income property included, but also one of the provisions in this bill, if you are successful in your appeal, in other words, if you got a surveyor, and it sounds like you've got a pretty good track record there, you've never had a flood. If you have your surveyor go in and prove that either you're outside the flood zone or that their elevation is wrong, okay, so maybe they have you at 1 foot below flood marker, and you prove that you're 3 feet above, under this bill that we put in place, that is actually this proposal, you would be reimbursed for any, if you're successful in your appeal, you would be reimbursed for any expenditures you had to defend yourself in that appeals process. So we try to, the reason we did that is to get at that gut feeling that I think FEMA's overreaching. So if we build into the law that you're going to be reimbursed if they overreach, I'm hoping it's a disincentive to them, because now they're going to say, oh, wait a minute, if we overreach and the guy wins his appeal, we're going to have to pay for it, you know? So I'm hoping that will push back and cause FEMA to be more accurate and less overreaching in the way they draw their maps. That's my goal. That's the goal of the bill. Yes.
Peter Stoplis, Hingham.
Thank you.
I'm in this property that they hit me with insurance. I've been trying to fight it for over a year now. Chase Manhattan could give a damn less. They're saying FEMA tells us to charge you, that's it, and there's no appeal process with the bank mortgage. Second is going through FEMA, going through our conservation committee, they have these maps, FEMA comes out with these maps. Now, there's a brook that runs behind my house, 26 feet down below me. So I wouldn't worry about a flood. I'd be getting an arc if that was going to be a problem. I mean, but the appeal process just carries on and on. I wrote a letter, never got a response. Now, I cannot afford a surveyor that said to follow their requirements. They're saying it would be a minimum of $800 to do a study. And that was a starting place. So I have a person that's very skilled in GPS and like that. And we did it. And we saw it. Visually, you can see it's at least 20 some odd feet. And with the longitude, latitude, and all that, pluses and minuses, which I'm not experienced at, it's 26 feet. Now, to me, it's cut and dry. But they come up with this map that shows a flood that would come through. And if I live on a hill, and if it ever hit my house, I think all of Hingham's gone, all right? I mean, it's just, and a good part of Weymouth. But the thing is, it's not delaying it, is have an appeal process that's reasonable. I have topo maps here, longitudes, latitudes, and shows 26 feet. And I've lived in this house for over 40 years, and once I saw some ducks way out there. There's trees growing there and like that. So it's even a 100-year storm, I just don't see the practicality of it. But my question is, how do I appeal it now? Never mind getting reimbursed where I can't put the outlay to do this study for what is obviously in error.
So you're in Hingham?
Yeah,
and
on the Weymouth line. So.
Okay, and so there is a townwide appeal, right? Am I right on Hingham? Yeah, there's a townwide appeal already going forward. As I understand the way this would work is the reimbursement, if the town was the entity that expended the study and the survey effort, then the town would be reimbursed for that property. If it was the homeowner, then the homeowner would be reimbursed. So I would have to, I don't know, Colin Masters is my legal counsel on the committee that deals with this jurisdiction. So is that basically what we're talking about here? That there are two venues for appeal. One is townwide and one is, okay. So if the town's appeal is successful, I believe that helps you and your neighbors who might be similarly situated.
Why do I have to go in? My situation is common sense. I mean, when you have 26 feet down below, I mean, you know.
Yeah. I know you're talking about common sense, but we're talking about the federal government here. So, common sense is not that common. So, at least in Washington, I'm sorry to say. All I can say, look, my sympathies and my heart goes out to you. I don't, I don't discount what you're saying. I do think that just based on what you've told me here, that it may be $800 well spent, at the end of the day, because I assume this is not a primary residence? Oh, well, you're going to be delayed. You'll be delayed. Okay. Go ahead, Bruce.
Is now challenging, or investigating a challenge to the mapping of this job. Steve mentioned earlier in his comments that there were some discrepancies. New York used a different technology than Massachusetts did. So the bill that they're proposing will address the issue of the difference of technology. That's number one, so that it's consistent. And number two, we are trying to challenge the maps that they've given to us. So that's underway. The selectmen voted for that, and I know some of the other towns have as well. So that's the step forward. So to Steve's point, you're going to have a delay, when while you're having the delay, we're going to take other actions to see, are the maps originally correct?
What?
If the bill...
Under the way... The law would have no effect if we allowed banks to charge the rates before they're legally allowed to be implemented. So I don't understand how the bank can charge you an insurance or okay. Here's the way I would address it. As Bruce has said, there'll be a town-wide appeal process going forward, and you could liken your own appeal as a belt with suspenders. You'd have two bites at this if you can afford that. I just think it is probably money well spent. However, you should, at least for now, you should take some comfort in the fact that because it's a primary residence, what's going to happen here is there'll be a 4-year delay. Now, I don't know what the affordability study will show at the end of the day, but it'll be a much better situation than what we have right now, what we're facing on day one. Here's FEMA's approach. They are trying to recapitalize the flood insurance program on day one. So that's why they're expanding the scope and they're raising everybody's rates so that the money comes pouring in and is immediately recapitalized. And in my opinion, without any regard to the affordability of those increases on the people who are affected, you. So what this new bill does is it says you've got 2 years to do this study, and affordability of the increases has to be a major factor on what you do next. And so what I anticipate FEMA will have to do is recapitalize the fund, but it might be over a 15 or 20 year period, rather than trying to recapitalize it on day one, which is what they're trying to do right now. So there will be some increases down the road, but what we want to make sure is that people can afford that they're reasonable. It doesn't destroy the real estate industry. That's a major part of our economic recovery here is getting the housing market back. And if you can't sell your home because it's saddled or encumbered with a massive flood insurance premium, that's going to kill a lot of the economy, and not just in this area, but all across the country. So, I don't know how I can assuage your fears any more than that, but look, I'll call your bank and yell at them. If I don't know if they might just yell back, I don't know, but I'm happy to do that and try to explain to them what's going forward. And we might have situations like that where insurers or banks are hyper protective and are overreaching as well under the circumstances. So we're going to have to work through this together. But I'm happy to get involved, and if I can help you, by all means. Okay. Hi.
Hi, Cheryl Snyder, 93 Kimball Beach Road in Hingham. I first want to say thank you to Senator Hedlund's office and to you, Congressman Lynch, and all of our town, Abby, in Hingham. They've been very, very supportive. I live in a high-velocity zone. I have to pay flood insurance. It just went up from $4,000 to $16,000 a year. I got the bill. My insurance agent is great. She just got it reduced from 22 to 16, but based on the mortgage amount, and my mortgage is only 140. If it was more, it would be more. So I'm an example, but I have great faith that that this will go away, or this will be a fair standard. And if that's the cost, then I'm looking at remediation of my property, changing my property so that I can raise it out of the flood standard. I'm below flood zone, the new flood zone, so I'm below them. So my question is really two points. One, this technicality of if we do pay our bills, like I'm going to have to charge that $16,000 or $22,000. Thankfully, I have good credit right now, so I can put it on a credit card. But for 1 year, maybe 2 years, but that's not a long-term strategy. So if I pay that because it's due, is there any opportunity to get that reduced and credited in the future? That's number one. So just think about that as a technicality. Because I can't lose my home, I'm going to pay it anyway, regardless. And then the second piece is I'd love to explore putting my home on, I call them stilts, or, like raising it up. But I don't think that the bank is going to give me a mortgage because I already have $140,000. With the property taxes and my new credit debt, I'm going to be on that 36% debt ratio.
Yeah.
So maybe a separate bill, not to hang up this bill because we need this bill to pass.
Yeah.
But I know the mortgage crisis really, I don't want to say the wrong, really hurt all of us. I was going to say a less polite word. But if there's any opportunity to take a look at mortgage help for folks or loan help for folks, so that I could qualify to remediate or mitigate the the property, because I'm paying it, in flood insurance, I might as well pay it to fix the property, right?
Right.
Thank you.
Right. Oh, thank you. Hi, Jim.
Thank you, Congressman. My name's Joe Rossi. I'm chair of the Marshfield Citizens Coastal Coalition. Just a couple questions about the legislation. In the legislation, the trigger for rate increases for a new home purchase has been removed. Does that also include policy lapse, or will that still cause a rate increase?
I'm not sure. Explain this to me.
The proposed legislation will remove the Biggert Waters trigger to increase rates once a house is sold or bought. However, that's one of 4 original triggers in Biggert Waters. So I'm wondering if that's the only trigger that's been removed, or if a policy lapse. We know from what you've talked about and from our understanding at the coalition, the 2 other main triggers were severe repetitive loss or complete substantial home damage or completion or repair. So the one trigger that hasn't been discussed is a lapse in policy, and we just were wondering if that will still trigger rate increases, or if that has been removed.
Well, let me think. If the property was protected by any grandfathering under the earlier law, and I'm not sure, would it be if there was a policy lapse?
If it was a policy lapse, it could be grandfathered pre-firm or post-firm, and it would still trigger a rate increase. It really has more to do with the flood insurance policy than it does the status of the home.
Yeah, I don't know. Colin, any ideas? Yeah. I knew we'd get some of these questions that I couldn't ask.
The other question is, in the policy, it says that pre-firm subsidized rates are going to be covered in the new legislation. However, some pre-firm structures, that subsidy is only part of the entire policy. So does that mean the rest of the primary residency pre-firm structured policy will go up, or is the subsidy mean the entire policy on a pre-firm structure?
Yeah, I'm not sure about that. I'll have to look into that.
Okay.
Yeah. It's not addressed in the legislation. Yeah, some of this would be subject to how FEMA interprets the bill. So
that's kind of what we thought as well, which is why we were wondering if that could be maybe explained a little bit better in the legislation.
Maybe that's a technical correction that we could put in both bills.
Okay.
Because that was certainly our intent would be that you would get the full benefit. But you're right; it only reflects part of the subsidy.
Sure.
Yeah.
The one other comment we just wanted to make was, for the gentleman behind us here, if you wanted to appeal and did not want a surveyor and you have the information, you can go online and get an LOMC. It's the online version of an appeal. It is free and you can submit it to FEMA, and it's an online structure. So thank you very much.
Oh, thank you, Joe. Thanks for your good work, too. I know your coalition has done great work and been very helpful to us all, so thank you very much. What's that? Oh, is that right? Yep.
Hi, Stephen. You visited us in Braintree. I actually live in Hingham, but post office there. Just going to mention I'm a neighbor of Peter's as well, and I've been in my house 30 years, primary residence, obviously, and a year ago is when I found out all of a sudden I'm in a flood zone. I have that same stream behind my house. I check it every week. It's dry. Nothing's ever happened. I've never had a flood issue. Now, if this bill goes through, I've already paid flood insurance for last year. Now I had to pay it again for this year. Will I get any, is there any kind of recourse where I can get a refund on what I've paid if it's determined that I'm technically not in the flood zone, as FEMA had claimed?
Yeah, I'm sorry to say I haven't investigated this aspect of it where the bill is already paid and we need reimbursement. Colin, we're going to have to figure out. But well, there are a couple of things at play here. One is you've already paid at the higher rate. However, the operative language in the bill would grandfather you at the old rate. So you might have 1 year paid, but when this bill passes, it would reinstitute the old rate, so it would go back down. But right now, I'm not sure that there's a provision in the bill that would address that. It's something that we need to look at. Maybe, again, this could be the type of technical correction where, you know, we require people to be reimbursed if they were charged the new rate prior to congressional action.
Well, what about if, like I'm going to do the appeal, the Loma appeal, that's what the lady told me at the local FEMA office to do the Loma, right? So I'm in the midst of doing that. I already had, in order to get insurance, I already had to have an elevation certificate, which I paid $500 for, surveyor did that, and so forth. So if I'm doing my personal appeal and then the town's doing the appeal, and it's determined that, let's say, now, yes, I'm not in a flood zone because the street behind me, the lady at FEMA told me, 2 people put an appeal in individually and won as far as the elevation certificate went. So, in other words, why would I have to pay for something, or I feel I should be reimbursed if I'm paying for something that's determined that I really wasn't in a flood zone all along?
Yeah, well, certainly the expenditure that you make on your appeal would be recoverable, but I'm not sure about the premium you pay in the interim. That's a gray area right now. Unfortunately, we didn't address that, but we're going to have to. I think I mean, I think even with the speed of this legislation going forward, it might be, December before we actually get a bill passed. So when you think about all the bills that are coming due, people are going to be, paying those at the request of their insurer or their bank to cover themselves. So it's obviously an area that's going to grow as the weeks go forward. So we're going to have to try to address that. Okay?
Yeah, great, thank you.
All right, thank you.
Hi, Congressman. Thank you for being here this evening. Senator Headland, thanks for being here.
Thank you.
I want to applaud you on your efforts on fast-tracking this bill to get some relief for all of us here in this room. I have a couple of questions. As you know, I'm on the whole Board of Selectmen. A couple of years ago, my town went to town meeting. We already adopted the flood plan before the raises were introduced and proposed. Is there any possibility of us going back and appealing that? Because I feel that we were hoodwinked because we were presented and we said, if you don't adopt these new floodplains, flood zones, you won't be able to get, your flood rate's going to go up, your insurance is going to go up, you won't be able to get insurance. And I feel that we were just snookered on this, and I'd like to have an opportunity to go back and look at it and appeal it. And a second question I have is, has there been any discussion about just putting a hold on the expansion of the flood zones until, not to slow down this bill, but maybe in a separate bill, to just put it on hold and have it be looked at, the technology looked at, and have them reassess how they looked into it? Because obviously the gentleman that's high in the bluff there, he's not going to get flooded. There's people that they just went way overboard, and I understand the reasoning trying to fund their program. However, it's on our backs, and the poor lady here with a $22,000 flood bill, it's unheard of, it's unrealistic, and I know this isn't going on deaf ears. I know you understand the anguish that we're all going through, and I do want to thank you for representing us and really taking the lead in this. Thank you.
No, thank you. I appreciate it, and thank you for your help as well. You've been very helpful, in terms of getting us information. The town efforts, I know that right now we have several towns that are going to consider this at town meeting. Some of them are scheduled until March, but they're going to have to either vote to approve the flood maps or maintain an appeal. And so that's going to, we can probably be pros and cons of each process. I'd like to sit with FEMA and figure out a way either to tell people that they don't have to approve this or waive that requirement until the legislation is carried out. In other words, this 2-year study, I mean, you would think that affordability would be one component or one factor that town meeting would need to consider before they approve a new map. And, the whole technology issue, this new bill requires the best available technology. That's grounds for appealing the map itself that's out there. So, I think it gives us more weapons to challenge the FEMA maps that are being proposed right now or might have already been applied to certain towns. So, I think there's a logical reason for FEMA to step back in the process once this bill passes, but I don't think they're there yet. Oh, of course. Okay. No, I fully support a delay across the board. I don't know if that's going to succeed, though. I think there are some areas of the country, the Katrina situation, some others where, remember, the mapping process isn't part of Biggert Waters, the bill that we're amending here. That goes on regardless of what we're doing in this bill. So I think it would be extraordinary to delay all expansion of flood zones, and I think it might trigger the scoring process within Congress on funding, because, you know, there are some areas that, you know, based on the changes in the weather, the size of the storms that we're getting, they have to be, I think, including in a flood zone. I'm not saying in the Northeast, but down in Mississippi, down in Louisiana, some parts of Florida, that they've been, you know, we've been paying hand over fist for some of those areas, and I think it would be detrimental to our interests if we were going to stop the remapping of those areas. So there's some good remapping going on. It's just not being applied here, I don't think. So I would be happy to have a delay, but I don't want to torpedo our efforts. If there was a feeling among the legislature that we're not going to at least address some of the repetitive loss properties, things like that, the 1% of people that have been drawing 33% of the funding down, I think that they would be reluctant to support us in our efforts on behalf of homeowners who have primary residences that are affected. So I think in some cases we might lose our credibility if we just said stop everything, and I don't want to get to that point. Right now we have a lot of support, not only from coastal and you know, waterway affected legislators, but also for some others too that just see unfairness in this whole process, and I wouldn't want to lose them by just saying, okay, stop this entire remapping process. I think we would lose a little bit of credibility, and we would lose some votes. We've got to get 218 votes in the House for what we need, and then we've got to probably get 60 votes in the Senate. And right now, I feel pretty confident that we would have that. But if they saw this as a you know, a way to shoehorn another effort to undermine the whole process, I think we might hurt ourselves. So we can talk about some of that after we get this thing done. But I wouldn't want to go forward with it just yet.
Thank you, Representative Lynch, for being here. Headland. I'm Otto Harling from Hingham. I have 2 points that I want to raise with you, and maybe comments or suggestions, whatever you'd like to call them. One is the accuracy or inaccuracy of the flood maps. There's been a lot of inaccuracies discovered, not just in our area, not just in our area near the South Shore of Boston, but in other parts of the country. You're aware of that.
Yeah, sure.
And FEMA is continuing to model the entire United States, to remodel anywhere where they haven't recently modeled. So this is very relevant for you to consider as you finalize this bill. I suggest that you make sure that the language in there that holds FEMA's feet to the fire to do this in a scientifically reliable way. Have the flood maps, for example, peer-reviewed by independent parties before they're presented to the towns, not by the contractor and by FEMA alone. That's junk science. And the flood maps, which are produced by computations from programs, they have got to agree with hard data. If they don't agree with hard data, they have to be adjusted to agree with the hard data. And I don't see that being done in general. If you talk to FEMA people about historical, factual data, they say, oh yeah, that's interesting, but that doesn't matter. So I really suggest that you look at improving the flood mapping, and FEMA has to be trained, if you like, to do that right, to do it scientifically correctly.
Okay.
The other comment I have is that perhaps some of the money that has been lost, put into this hole that FEMA has dug, the $24 billion or whatever it is, it's in that neighborhood. borrowed from the U.S. Treasury. Perhaps some of that shouldn't have been spent. For example, insurance companies, private insurance companies, write the flood insurance and administer it for FEMA. FEMA doesn't do that. They use private insurance companies to do that. These private insurance companies get over 30% of the premium for doing that writing and administering. They have no skin in the game. They take absolutely no risk. That's a wonderful business. I wish I had figured that out myself when I was younger. No, I'd look at that and see if maybe there's some savings possible there. I agree with you 100% that repetitive loss properties and other properties that are at high risk should pay an appropriate flood insurance. I don't think the taxpayer should subsidize anything. It should be a self-sustaining program. But please take a look at the efficiency, the fiscal efficiency of the program too.
No, thank you. Actually, there is a provision on requiring FEMA to use the best available technology, which then would be a ground for challenging their map on your first point. But I think as well, there may be a perverse incentive or a moral hazard by allowing the insurers to get 30% of a bigger premium. There's no incentive there for them to, it actually feeds upon itself. So, no, that's a great point.
85% insurance companies lobbied for the Bigot Waters Act. I wonder why.
Yeah. Angel?
How are you?
Good.
Angel Montanez, I'm from Weymouth, Mass. I've got three properties on the water, and throughout the years I've paid only flood insurance on one property so far. I'm contesting the other two, and I've been pretty successful staying with the issue. I did hold this gentleman's comments about maps. Maps, I've found them to be with errors, and I've proven twice to FEMA through the long process of being over the phone and stuff like that, the errors that they've made. And one of them I found out, it might help some of the people in here, that if they transpose the map over to their plot plan and the water doesn't touch the property itself, it's not considered a flood. So they're not affecting your property. Because what they did to me was they had water touching my land, but wasn't touching the property, and therefore I don't have to pay flood insurance on two of my properties. What I did find out also was that the banks are not the people responsible for these flood maps. What they're doing is they're sending the new FEMA maps out to third parties and having them interpret the map and leaving the burden on the homeowner to prove that they are not in the flood zone. With those third party people, again, they just take a look at the map itself and see that it's in there, and again, and notify you. What I did was, two of my properties, just a little history here, was I didn't purchase flood insurance. I let them force place insurance on two of my properties. Completely lower, significantly lower than having to go to my insurance company, because when you go to the insurance company, as you say, they are out for profit. So you just don't even do it. Let them do a forced place, and when they do it, it's usually with Fidelity. Fidelity will come in with a much cheaper rate. So there's an aid right there. What I find very difficult about all this flood insurance situation here is FEMA will only pay, from what I can understand, $250,000 replacement cost value on your home. If you got $250,000 replacement cost value on your home, the bank tells you need a mortgage, insurance for $350,000, flood insurance. Well, if they're only going to pay $250,000, why are you buying a policy for $350,000? And then you say to the bank, well, whatever happens to that other $150,000? They says, well, you need to go out and get insurance. Well, you call around, you can't get insurance to cover your mortgage in the event of a flood. So you just go around and around and around with these people. And again, they tell you need $350,000. So what they do is they put forced place coverage on your policy. So they give you the $250 policy, which is on Flood Smart, which is a rate of, say, $2,200 or something like that for $250. And then they go out and they buy it somewhere. When you ask them where they buy it, they don't even know where they buy it from. All they know is they place it on your policy. And you say to yourself, like, wow, this is crazy. Where's this coming from? Then think about this. Last thing, and I'll let you go on this one. Every month you pay a principal on your policy. So every month, if the bank says you have a $350,000 on January 1st, $350,000 mortgage, the next month comes down, it comes down, it comes down. By the end of the year, the $350 might be, say, $345 or so. You still have to pay the premium on the $350. They don't even give you a rate, you know, or any kind of a decrease in your premium. I mean, for me, I'm doing all right, but for the people that can't afford it, you know, you just say to yourself, this is absolutely crazy. And then what I did find crazy as well is that two of my properties that they put a premium on, one is worth more than the other, and the one that was less had 3 times the rate as the one that was worth more. So in other words, it was like, how does this work? You know, you want me to pay $5,000 on a house that's worth X, which is lower, and opposed to the one that's worth more, and it was half the premium. Is like, this doesn't make sense. So the long and the short of it is there's a lot of, you know, little steps that have to be worked out, and I understand this legislation is just to give some kind of relief, but it would be nice, like he echoed there, or echoing on his comment there, that FEMA should look into their research a little bit more, look into their policies and have some answers, because right now I don't have any answers, and it's a status quo for me on my case, where I'm not even really paying anything right now until they can figure it out. So, and you do get a rebate from Sovereign Bank. I know that. I don't know about Chase, but Sovereign Bank will give you a rebate if they find out that they're in error. Okay.
Okay. Thank you. I know that when at the Marshfield meeting we asked them, are you just reviewing a map that was given to you, or are you actually conducting surveys? And I think the company was called Star that was doing the survey, and they explained that they were using some laser technology and they were doing a flyover. Now, I don't know, maybe that's just them, and I'm not sure of the accuracy of how they're implementing that mapping process, but hopefully with this bill, it will require them to, you know, maintain a higher standard. And also, I think with having the reimbursement for the appeal process for homeowners, it might cause FEMA to ratchet back a little and be more careful about overreaching, because they're going to start to lose all of these appeals, lose all of these challenges, and they're going to have to pick up the dime for the, you know, for the homeowner that conducts the appeal. So
the person that's not astute to look at that map and be able to decipher, you know, exactly what this means and how it interprets, because it's not very clear. They just send you a letter saying you're in a flood zone, you need insurance, you know what I mean? But they don't really tell them that it's the house that is the insurable product, it's not the land.
Right.
And for that, you know, granny who's sitting home and she's next to you know, oh, I got to pay this now. It's kind of like, no, it touches your property. You don't have to pay flood insurance, but you get the note from the bank, you know what I mean, and that scare tactic and things like that. It could be done a little bit better. You know?
No, absolutely. I agree with you, Angela. Thank you. Angela.
Kevin Harris, Weymouth.
Hi, Kevin.
I am one of those people that live in a flood zone, V6. I'm right on the water in Weymouth. And I've been a community leader trying to get seawalls improved and built in the area to reduce the possibility of flooding. But my understanding from town officials and from insurance is that once the seawall is constructed, that FEMA is under no obligation to set any time standard for reviewing this situation. In other words, they can wait years and years and years before determining that the flood danger has been mitigated. So my question or point is, will there be a time limit in the bill saying that once a mitigation program has gone forward, FEMA is under obligation to investigate within a certain time period rather than 10 years down the road when we continue paying those flood rates? And second is slightly off topic, but you mentioned in your discussion that there are no federal funds or minimal federal funds for seawalls and for flood mitigation. So this is for both you and Senator Hedlund. You know, what's the future look like? Are we going to get help to mitigate these flood issues, given the fact of the large number of claims that have been going forward? Thank you.
Okay. No, great question. I may have mentioned it before that one of the pieces in this bill will actually give credit immediately to local cities and towns for the flood mitigation measures that they adopt. Up until now, in order to get credit from FEMA for flood risk mitigation, there had to be a 50% share paid by the federal government for that mitigation effort. Under this bill, a mitigation, a seawall, for instance, or a dam that was created to mitigate flood risk would get immediate credit from FEMA, even if it was just locally and state funded. They probably did drag their feet in the past in terms of giving credit to cities and towns, but hopefully under this legislation, we'll get rid of that problem.
I'll just add to that, Steve. And I was thinking of this issue actually when Mr. Pica spoke, because ironically, the property that he was using as an example, I believe, is adjacent to a federally funded flood control project that was done, I think, in the 70s or the early 80s. A massive amount of money spent by the federal government that alleviated the problems in that neighborhood, and there haven't been any problems since. So there's a little bit of irony here that we're talking about federal money going for these kind of flood control projects and no recognition by FEMA that they work.
Yeah, I wonder if they've actually done that if they've factored that in. I mean, the fact
in his case, I don't know, but in answer to Mr. Harris's question, that's right. I mean, the federal funding has dried up for this, and I can't give you what the numbers have been historically from the federal government, but we've picked up the slack incrementally, and it's incremental. We know that most of the seawalls were constructed during the WPA in the 30s, have outlived their life cycle, and we've got a huge situation to catch up. Now, we did, to give us, those of us who represent coastal districts and are concerned about seawalls, which many inland legislators aren't concerned about seawalls, quite frankly, one of the things we were able to do a few years ago is get an actual survey done on what the unmet needs are statewide, and it's in the billions of dollars. And the amount that we fund through our capital program is minimal. Now, one bit of good news we had, there was a dam safety bill moving through the legislature because we had a significant problem in the state with the safety level of dams. There was a bill moving that we were able to kind of piggyback on that split the funding for seawalls. Folks who are concerned with dams, we haven't had a lot of luck with that in the past. If we go back to what the original mission of the Waterways Division at DEM, and I know Steve knows this from his days in the legislature, we had funding streams in the past that went for those kinds of projects like seawalls, coastal erosion, dams. Unfortunately, at some point in time, the legislature diverted money from the marine gas tax revenues that were supposed to go for that. So we've continually had funding stream problems for this. We do have a new program in place. It's minimal, though, to pick up where the federal government left off in providing these kinds of funds, and it's minimal when you consider what the unmet needs are moving forward. So, the glass is either half full or half empty, depending upon how you look at it. And in the case of your project, we're trying to, the one in your neighborhood, we're trying to move forward, but we need a little bit of community consensus on what the design is going to be like. Once we get past that, we think we can move forward.
Thank you, Senator. Let's see.
I wanted to, I'm Doris Crary, and I'm a member of the Marshfield Coastal Coalition and also the Situate CRS Committee, and I've been active in flood insurance for now over 20 years. And one of the things that we did was to look at the blizzard of '78, which in the flood insurance study is cited as the 1 in 100-year storm. It actually, according to the Army Corps, was the worst storm in 200 years. And this is what our maps are supposed to be based on. When they were originally done by FEMA, they used this information and mapped it. What we found, and we were fortunate that in Marshfield, we had 2 town surveyors who had mapped the blizzard of '78 all over the whole town, who were able to then look at the new mapping that had been done on the most recent ones that we did not, that we appealed, and it's in our appeal, this information.
Excellent.
And what we did, and we found out, was that they had taken the town, which was originally from the blizzard of 78, an average of 8.8 feet, and that's in NAVD, and their new number, and they had taken it up by 5.9 feet higher. That's over about a 70% increase.
Yeah.
Now, that's why there's such a problem with people's homes and the problems. In the town of Marshfield, after the blizzard of 78, and this is now, they used a measurement of around 9.6 feet in NAVD, 11 in the old numbers, 29, and they proceeded to have every property built at that elevation since then. Now, with that, the flooding in the town is not, with the number of properties being damaged, is not going up. There are fewer repetitive losses coming on board because 35 years later, and 35 years of good implementation in the town with good regulations has done it right. What we have right now is a bunch of mythical maybes, not anything that is actual and not based upon the criteria that they originally set. And I think it's the same for everybody here. These numbers come out of Boston, and they looked at them there, and that's what they used to determine the blizzard. And somehow what they did in the legislation, which misled, I can tell you, I think a lot of the towns in understanding it, and I'm talking about the Biggert Waters Act, they defined in there as having to be technical and scientifically accurate based upon the BF, the base flood elevation, and delineation of the floodplain. What they didn't say was it could be based on your boundary, which is something that a surveyor would do. And if you think about the boundary, to take 5.9 feet more and stretch it into the town is a huge difference. And that boundary is wrong. And that's why people who have no flooding, because they've never been in a flood zone, and they still aren't in a flood zone, but they've classified their land as part of a flood zone by stretching the boundary further in, by elevating the water up by some 70% more than the actual blizzard of 78.
Wow.
Okay? So I just want to pass that information along, and if I can help in any way on that, but we did put it in the appeal.
Okay.
And we can, I'm trying to get more information. I'm trying to track down all the measurements they took in the town in 78, get them on a map, and then do the overlays. But our map of 86 was much more accurate than the new map.
Yeah, it sounds like with the benefit of those surveys back in 78 that you're in great shape. I wonder is there any collaboration being done between towns in terms of your appeals, or is everybody going on their own way? Because I think people could benefit from your experience.
Yes, there was a lot of collaboration that went on between Scituate and Marshfield. They both used the same companies for filing on the scientific and technical data. I haven't been able to personally get the same, interestingly, I got the same information in the town of Scituate, but I'm sure we could press it because I think it's the elevation sites that are done by FEMA that we have the information on. So it's probably doable in virtually every community because you have your own map which has got that information, and you go there and take the new maps and do it. We were able to have them look at the new maps and take the information right off the new maps. So
that's great, because I know there's Mayor Koch from Quincy sent a team over from his water infrastructure people, so they could. They're about to become. They're about to begin the mapping process over there, so they could benefit greatly from your own experience.
Steve, if I may add,
Sure,
there recently has been formed, because of this issue and others, for 6 towns in the South, a regular meeting, monthly meeting of the chairman of the Board of Selectmen, something we want to do. And this was an issue we said, since we're all going to reinvent the wheel at the same time, obviously it's not go over the same ground, so there's more to come from it.
Yeah, I was just thinking if we could sort of garner best practices in terms of putting forward a successful appeal, it would help. And this strengthen numbers, you know. Yeah. Yes.
Hi, my name's Deb Cartwright. I live in Hingham. I live next to Cheryl. Let's just say I could sell my property. What I'm asking is that 4-year delay you're talking about, does that delay carry over for the new owner?
It does. If you sold your property tomorrow,
Yeah.
that new owner would also benefit from the new delay and would have the full benefit of that. We did that because, you know, the market for real estate would basically seize up if you couldn't sell your property, and you know, there'd be a lack of buyers if they were going to be staring at a $16,000 increase in their flood insurance premium. So yeah, so the short answer is yes, they would benefit as well.
Hi, I'm Ken Corbett. I'm from Hingham.
Hi, Ken.
My question kind of touches on what Otto asked, and just so you're aware of this, it seems that if the town does their LOMAR application and we do get this, the review board, who does the reviewing of the applications, seems to be FEMA itself and their own contractors. Now that doesn't seem very right.
Right.
Is there anything that is going to be addressed about that in this legislation?
Well, I think in terms of this bill, we question available technology, what they used, but you're absolutely right. In the past, they're basically reviewing their own decision, and so the tendency for any bureaucracy is to basically agree with their first conclusion.
But in the immediate future, it's still the same setup. It's still the same review board that is within FEMA, and it is not an independent.
Yeah, I think there's well, we try to address that by creating this Office of the Appeals Advocate within the legislation, so that we have somebody in FEMA who's actually acting in the interest and on behalf of the homeowner. So that's different. And also asking them to come up with criteria that would allow us to overturn a decision that was not consistent with the affordability study. You know, so we're trying to make sure that we hold their feet to the fire and create incentives for them not to overreach, like the reimbursement provision and the appeals process as well.
It just seems if they want to dig their heels in, they have all the power. They're their own reviewers. It just doesn't seem like the reviews are going to go very well.
Yeah. Well, we'll find out.
Hi, I have a small cottage in Humrock that's been in my family for 40 years. It's investment property. When do you think you'll be introducing legislation to protect the non-primary homeowners?
Soon. However, I want to just let you know that it does not comport with the pay-as-you-go rule, so we're not in compliance with that. It's the basketball equivalent of a three-pointer. You know, we're trying to induce them to have a similar treatment for income properties, but I think the better result, or the more realistic result, might be to provide you with some relief so that you're not getting hit with the full increase that they're trying to put in right now. So the bill will be offered soon, but I have no idea about the receptivity of this in the long run in terms of the House and the Senate.
Has anybody done any studies on what is the percentage of primary versus rental property?
I'm sure they have. I'm not aware of it. In terms of how many properties are occupied as primary residences versus it changes with geography. You know, further down the Cape, I think you've got a greater preponderance of rental properties, and then you've got the mix moves more towards primary residences as you move north.
Good evening. My name is Jeff Calla. I'm from the town of Situate. and I want to thank you and all the other members of our congressional delegations who are working very hard to try to remedy this very serious problem that's bestowed upon many, many people. Even those who are not in the floodplain, they will be affected by whatever falls out from this, just from property values in the towns and so forth. And my question goes back to a comment that you made a little earlier with regard to the affordability reviews. I see this as a twofold issue. First is this excellent attempt to try to do something with the premiums over this first 4-year period. But more so than that, the whatever shakes out of this can have such a dramatic effect on the pricing of our house when we go to sell it. That's, for most, if not everyone in this room, that's where their whole financial future rests.
Right.
And these burdensome rules that FEMA has placed upon us make it as though they have taken our house by eminent domain without paying us for it. And this is a question, is that going to be part of the affordability study?
Well, certainly there's an impact. They've devalued your home if they're putting on this extra burden. If it's a $16,000 premium per year annually on your home, obviously that's going to reduce the value of your home to a prospective buyer.
You can sell it at all at that point. That's like quadrupling their property taxes.
Right. Well, it'll certainly reduce the value of your home. It'll reset the market for homes in that category. I mean, I am familiar with takings law. I don't think it approaches that. But that's just my own opinion of the reading of the cases. It has to be, basically a taking of all foreseeable use, that type of thing. So this is certainly an egregious tax, if you will, on the property itself. But there's, I still think that it doesn't amount to a complete taking. We could make that argument, but I don't think we'd succeed on it. Oh, of course. If you're forcing people out of their homes, because they can't afford the increase in premium, and you're also, in a very large way, encumbering their ability to sell their home, because it's now got a huge, debt load on it, if you will, because it comes with, astronomical insurance premiums. Yeah, I think the result of the affordability study will be, as I stated earlier, that instead of recapitalizing the insurance fund on day one, which is what they're trying to do, there'll be a amortization, if you will, over 15 or 20 years, that gradual increases over that 15 or 20 years, with the increase in the value of the property itself as well, will get us to where we need to be. And also remember, they're carving out these severe repetitive loss properties that have been sucking the fund dry on a continual basis over the past 50 years. So once you get rid of that, it's like your kids moving out of the house. All of a sudden you've got all kinds of money that you never knew you had before, But, I think that when we reduce our overhead by having those properties off the grid, if you will, I think that the fund will recover, but it will do so in a way and in a time frame that allows people to stay in their homes, but sees the fund recover its health, incrementally, logically, in a good way. There's no need to recapitalize it tomorrow. I understand that's FEMA's goal here, but we didn't get to this point overnight, and we shouldn't expect for homeowners to recapitalize this fund overnight. Yeah.
Roberta Balduzzi,
Hi there.
home. I'd like you to just repeat the name of the bill that you're trying to, and
It's
also,
the,
does it have a number?
Sure. The official name is the Grim Waters Richmond Homeowner Flood Insurance Affordability Act. Rolls right off the tongue.
Say that one more time. Grim?
Yeah, it is. There is a title. It's HR 3370. It's rather readable along congressional standards. It's only 19 pages, so this is not a 2,400-page bill that you need staff to research and all that. So it's fairly straightforward, and you might need to get a copy of the original Biggert Waters bill because it amends that in various places, and it refers to that during the course of the bill. So
I have another question also. I'm a little confused about the current bill that's in force right now regarding grandfathering. My insurance company told me, and I don't know if this is because of a consideration that I've had flood insurance since '82, which was before the original flood map was instituted, that my grandfathering will stand, which I was zoned, I am in a VE zone, and I was grandfathered in the AO zone. And I just want to know I just want a clarification, because it sounds like it's too good to be true, that my grandfathering will stand as a primary property owner, and that my flood insurance is not going to increase, and that the 20% per year apparently is not going to be implemented upon me. Is there some misunderstanding here under the current bill?
under Biggert Waters,
Yeah.
in the past, grandfathering was allowed. Under Biggert Waters, grandfathering goes away, right?
As of 2014,
Colin.
correct?
Pre-Biggert Waters, grandfathering was allowed. Post-Biggert Waters, grandfathering goes away. Right. Yeah. Come on up here and speak here, so you, or give him a microphone, whatever.
Right. They said that my grandfathering is going to stand, which that would be the AO, and that the 20%, it's just going to go increase normally as it always has,
Right.
but not the 20% per year. Is that having anything to do with the fact that rather than being in a preferred policy, I've always been in a risk policy? And because I've had flood insurance since at least '82, does that give me a different consideration? I mean, because when you read over the bill, or the little poop sheet that you get from FEMA, it's not clear.
Right. That might be, and I think we'd have to take a look at the policy to be sure, but my understanding of Biggert Waters is that if you are pre-firm, your rates do go up 20% a year. It moved it from a 10% cap per year to a 20% premium cap per year. It may be that the type of policy that you have has some sort of other provision in that, and we could take a look at your policy and make sure, but like I said, if that's what your insurance company is telling you, then I wouldn't ask too many questions.
Okay, so that's misinformation, basically,
And
from them.
I think so.
Well,
I mean,
if they're charging you what they're charging you based on their own schedule, then that's not a bad thing as long as, it's suitable for you. But they might be misreading. I'm not sure.
They may not be up on things. That's my concern. I mean,
Yeah. Hopefully they're not watching this program.
right.
We're gonna censor that part of the tape.
Yeah.
I know we got some time constraints coming up. We just want to get a read on maybe how many more questions we got. Hopefully from the audience. We got Becky back there, newly elected Weymouth Town Councilor.
Ah, very good.
Sorry, Angel.
Hi, I'll keep this quick. I'm Becky Haw. I'm from North Weymouth. I know recently, within the past month or two, there have been numerous residents up in Weymouth who've never had flood insurance, and they've got slapped, like this gentleman over here, with either bills or notices that they now have these outrageous premiums. I've heard $8,000, $12,000, $11,000, $17,000 a year for houses that have never had flood insurance before. And this is all happening probably within the last month or two. Should these residents take action now, or should they pretty much wait to see if the bill passes in or around December? Or what's the best course of action? Because these residents are kind of in the dark as far as the best way to go forward.
I think at the very least, file the online appeal, and depending on their individual situation and where they are at, they might want to consider getting a surveyor and doing a more elaborate appeal as well. These are Weymouth.
Yes, and I guess the question is, should they, a lot of them want to rush and do this, obviously, because this is hidden like suddenly. So should they wait until this bill is passed to see if the relief is there for them so they can be reimbursed for the surveyor, see if the rates go down, or should they jump on this right now?
I think it depends on the individual and how they're being affected. I heard earlier we have some banks and insurance companies that are asking for premiums now.
Right, like I know probably one or two ladies, they actually got bills, and the bills are actually more than their monthly mortgage payment. So they don't know if they should be paying that, or, and so it's, and you just said, I think to him not too long ago, that they shouldn't be billing yet.
Yeah, well, it depends on the degree to which the insurance company and the mortgage company are asking. I mean, if you're going to default on your mortgage, that's not a good thing.
Right.
You can't go in arrears. So, you're going to have to deal with whatever your mortgage company is asking for you, or your bank is asking from you. We can get involved and tell them what the forecast for this legislation and what the impact would be. They probably don't know, to be honest with you. They're probably just going based on, on the new assessments.
And who's the best office to contact if you're in like Weymouth?
I would say my office, Catherine. Catherine Shea is in my Quincy office.
Okay.
And we can help with that.
Okay.
If anybody's really getting squeezed, by their insurance company or by their mortgage company or bank, we can intervene and just explain what's going on. Maybe we can get reassurances that even if they demand payment, that you might get a reimbursement once the stay goes into effect. Because everybody's on a different timeline. Some of these mortgages, when the money is due, whether it goes into escrow, that type of thing. So,
thank you.
I wish I had better answers for you.
Okay.
Steve, if I may, just as a good follow-up to Becky, who just got elected to the Weymouth Town Council, there's a couple of other town officials that have been here for the duration. I think the pre-meeting and the meeting. I just want to really quickly recognize Kevin Richardson from Hull. I know his two colleagues were here most of the meeting and just left, Domenico Sestado and John Riley. Bruce Rabufo, who helped organize the facilities tonight. Paul Healy, newly elected fairly recently, Town of Hingham. Irma Lotta and Fred Coed from Cohasset down here, in addition to the folks who were at the meeting earlier. So I want to thank them for sticking it out.
Anybody we missed?
In your office and the great resources that you provided on this issue. We appreciate your time, especially.
Thank you.
So I don't know if we had any last...
One more? Anybody get a burning question that they have to ask?
Oh, and if I may, while Doris is getting the mic, I would like to make one brief announcement. The Marshfield Coastal Coalition, which is the actual title of the citizens group that organized the rally, but also has been a great resource for residents, they are actually kind of taking their effort region-wide, and maybe, Joe, you could enlighten us as to what that is all about. Joe Rossi from the coalition.
Yeah, that would be great. Yeah, please do. Doris?
Doris has one thing.
Okay, yeah.
I just wanted to mention about the question there. For anybody who is newly mapped by these new maps into the special flood hazard area, and you were never mapped in before, you absolutely need to get what's known as a PRP policy, Preferred Risk Policy. They are less than $500, and they do not count basements or any of that, and they are being grandfathered for 2 more years when the maps go into effect. So we're here tonight talking about legislation, but the maps are totally separate of the legislation and that you're working on. So I just wanted to be sure people knew that, and that is the policy. Your regular insurance agents should be able to write it for you. Your bank doesn't care what you pay for it. They only care that you have it.
Right.
So when you put their name on it and you send it in, the fact that you got it for under $500, they're not going to care. If your property is located in the special flood hazard area, you are not eligible for this policy. And you must do it before your house gets moved into the special flood hazard area. So you want to take it out now.
All right. Thank you, Doris. That was great. Thank you.
Thank you, Senator, for mentioning that. We, as many of you here probably know, we're the Marshfield Citizens Coastal Coalition. Our website, marshfieldcoastalcoalition.org, is a great resource for not only Marshfield, but it's a very generic to this entire issue, including our 67-slide presentation we've given to many realtors and professionals, and we will be giving it to the Mass Association of Realtors in a couple weeks. On November 21st, over the next 4 years, hopefully pending this legislation passing, our efforts as citizens needs to be to write the legislation the way that we as homeowners would like to see it written, because we are the ones that have to burden the cost at the end of the day. November 21st, we will hold a meeting in Marshfield, place to be determined, we're working on that now, called the Southeast Regional Coastal Coalition. It will be open for professionals, town government, state officials, and citizens alike to start the process of gathering together to help start to rewrite the legislation for the end of this 4-year pause. It's only the beginning of a very long process, and we want to thank again the Congressman and all his staff, all the state and local officials here for getting us to the point we're at. Now we just have to go that next step, and that is to start to write the final piece. So again, we'll go to the website, and for updates, we update it almost daily. Thank you again.
Okay.
I should mention.
I think that's it. My last statement will be: look, thank you to Senator Hedlund, also Representative Jim Cantwell, Representative Garrett Bradley, and also Representative Jamie Murphy over in Weymouth. They've been hugely supportive of our efforts, and they've, along with the senator, have been very, very active in advocating on your behalf and helping us be somewhat successful in Washington. So thank you.
And one last note, if we might, since we're talking legislation tonight, at the state level, a bill's been filed. It's not a panacea, but it does have a raft of co-sponsors, including the Attorney General and the Speaker of the House, myself, and I think some of the other guys from the region here. I'm not sure the total number of co-sponsors, but it would, and it goes to a question I think Mr. Montañez, or a comment Mr. Montañez made earlier, and this would make some changes. It would allow the homeowner, at their option, to have their flood insurance limited to the amount of their mortgage, as opposed to the value conjured up by the bank of the property. So that would give homeowners a little more flexibility in making a determination as to what they believe the appropriate level of insurance would be within those parameters. So that's something that we hope we can advance at the state level to help out a little bit. So
that's great.
Thank you.
Thank you, everyone. Thank you.